Oh, hello and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Wednesday. It's the 13th of March, 2022. And today we want to dig into a very interesting topic. In fact, I'll go through a day with you of a professional trader. In fact, we'll go through a day of mine through my trading, my preparation, and everything. You probably have seen that in the past. So today also, again, every webinar we have might be on a Wednesday or on a Friday. Usually, I say 1 second, please. I just have to write down some, take some notes, so that I'm fully prepared now after we finish the webinar. If I jump into the trading day then around US equities trading. And this is exactly what I want to guide you through today. And we want to do this with a trade I did in Apple already at the end of January. I really well remember that trade because it was not just a trade in Apple, but it was all in all a market play. And I was really, surprised due to the weak start into the year in stocks in general. I think that was the weakest start, especially in the NASDAQ, I think since 2000, if I'm not mistaken. I haven't checked the stats now in detail because I want to talk about the trade especially. But this is exactly what we want to go through then. And I want to present you some thoughts on how to fully prepare for the day, not just in terms of what's interesting in terms of data, intraday fundamentals around Apple or in stocks in general, so that these stocks become hot, but also how to combine your knowledge about a certain asset you plan to trade, stock you plan to trade, and take these intraday fundamentals and then combine them with the overall big picture you have. I will show you how to find out whether the stock you plan to trade is or should be considered a market play with a tool which is available for free, which you can download for free on the website at admiralmarkets.com. There you have the chance to download the so-called Supreme Edition. And within this Supreme Edition, there's a so-called correlation matrix. And we want to use this, and I will show you that the S&P 500 and Apple here in this case have a high positive correlation, which means if you formulate a potential, let's call it bounce play for the overall market, but don't want to play the ETF on the S&P 500 Spider or the S&P 500 CFD, but instead want to go with a single stock in this context, then Apple might be of high interest for you. So everything around this will be topic here within the upcoming 45 minutes, I think, something like that. Please feel free to ask your questions here in the live event in the chat box. And by the way, if I say live and chat box, hello traders. So this is where you can ask all your questions. Everyone watching this now on YouTube, please first of all subscribe to the YouTube channel. Then in addition to that, set a reminder so that you don't miss any of the webinars which we produce for you and upload in the channel. That is not necessarily only true for my webinars, but also for the ones with my colleague Paul and also with Marcus, who's running his morning show every morning. And if you have then questions or comments, or if there's topics you'd like to hear something about from our end, prepare something on, please feel free to leave the comment in the chat box below. And so that's it around the YouTube channel subscription. First of all, let's have a look here at Admirals, the broker who is behind this series, who makes all this possible. So first of all, Admirals is in the industry for now over 20 years. So since 2001, in fact, and an FX and CFD broker with over 8,000 financial instruments being offered. Global presence, over 20 offices around the globe, fully licensed, fully regulated by several regulatory entities like the SISEC, like the ASIC in Australia, like the FCA in the UK, and so on and so forth. So fully regulated. And by the way, I just realized I have to here change this. So Yeah, admiralmarkets.com. Everything around the broker can be found there. If you have any questions, feel free to shoot an email. As I already mentioned, one world, one broker. That means you have a high chance. I mean, English is most likely not a big issue, but if you're listening here to this webinar now, but if you feel more comfortable talking in your native language, whatever it might be, chances are high that you will find someone in the customer support at Admirals speaking your respective language. And here, then I think the first step is done to build a very comfortable relationship with your broker, who is an important business partner when it comes to questions around your money. So feel free to check out here the contact details at the end of this presentation. Respectively, in addition to that, I'd like also to add something I forgot in the slide before: fractional shares. This is probably something which is of interest. In case of Apple, the stock we look at today, it's not a big issue, but right now and before the split then in Tesla will take place, probably you're also interested in investing some of your funds in Tesla, until the split goes through, then somewhere in the I'd say second half of this year, probably we'll want to invest first funds already, and with fractional shares we have a great way to also invest funds which are below the current share price here of Tesla, in this case of over 1,000 USD a share now. But coming to today's agenda and today's topic, so first of all, what we want to do and what I want to show you is how I go through trading day myself. So I have a clear routine I follow every day. It's sometimes really boring because I know already in the morning what I have to go through, even though I don't know which stocks I will potentially play in the afternoon then. So now for today, for example, I'm currently watching 3 stocks, and let's just see how market comes in. So I'm, to be honest, really happy that I don't have to focus on the market opening right now, because the first 15 to 20 minutes, the market will find its price. And then let's see in which direction Chewy, CHWY, Micron, MU, after yesterday's earnings, both companies, Chewy worse than expected, Micron better than expected, and potentially a Robinhood. So the broker, it's Hood, HOOD. From the US, there was an announcement yesterday that they plan to extend trading hours. They don't need an approval from the SEC, and thus the stock went something like 25% higher or so, closed within the highs of the day, and potentially and so increased volume there. So with over 100 million shares being traded, so probably this is also a play which is interesting for today. But let's just see in which direction the market will present itself. And I knew this yesterday, and then I have a certain way to prepare my day, which intraday fundamentals to capture, what to analyze in terms of the overall big picture. So for example, if I watch something like Micron, and I'm watching the ETF on the semiconductor, in this case SMH, for example, to get an overall picture, not just from the S&P and Nasdaq, but also how the overall sector is playing right now, and then use this as a further potential driver, which underlines my, or which increases the likelihood of my hypothesis playing out. And then going through this routine, this is what the first point is about. I also want to show you still not just the trading itself. So this is most of the time what people are very interested in, and I can fully understand this. And this is one of the reasons why, for example, live trading events are usually seeing a huge increase in our audience. If you say, well, there's a live trading around whatever event, Fed event, or NFPs, non-farm payrolls, or US market opening, or European market opening, whatever it might be, people are usually getting really excited and say, wow, this is live trading. This is exactly what professional trading is about. I have to disagree. I don't think so. I think the live trading itself is just the execution of the plan and the preparation I go through, and the performance is usually found at the beginning when it comes to the preparation. So if you're well prepared, chances of you performing well are very, very high, or at least increased. And then after the trading day, there will be fields where you can perform better the next day. And so then what is important also is how you finish the day, what conclusions you can draw out of what you just traded, and in this this context. So it's not that the execution is not important or something, but it's just the execution. And sometimes it's like, people will just see me executing in such a live trading event, and I can completely understand that they are excited about this. But most of what I do there, some people just look at me and just say, wow, this guy is really crazy. This is like a true trading guru. And how did you know that this is the level to watch here? And the initial reaction we got to see there, and wow, he has to have a great feeling for the market. Well, I mean, I like that to be considered that way, but it was hard work beforehand already, and I went through in my preparation to be capable of saying, well, this is the level I'm currently watching. So when I right now jump into the action in today's trading, for example, and say, hey, I plan to trade hood. What level do I want to see to hold after yesterday's price action, and above which level I appreciate hood to rise and hold there to enter a trade then, which increases the likelihood of a follow through from yesterday's move. Well, I have the levels clearly in mind. 1550 on the downside. If we flush lower and hold this level, risk reward wise, very interesting level to enter. And on the upside, an opening drive above 1650. If 1550 holds, this is currently where we're trading a pre-market, we're driving higher. Well, great. Then let's see whether we now get a consolidation above 1650, yesterday's highs, and then take it from there. Chances are high, given the overall picture, that we are probably getting to see a follow through, which will drive us up to 1750, probably 18. And I can all this now, I can tell you this because I went through the preparation beforehand, and this is exactly why it's so important to be fully prepared. And it's not just the preparation technical wise, but also your mindset, which routine you go through. So I just finished my meditation, for example, for today, to just start with a clear mind into the trading day. And once I finish and the trade is through and everything, I have to take notes, write everything down, and then go through the trade once again. And then this whole process, this is in fact what we will go through then today. So first of all, let's start here with the first slide. So a trading day with a professional trader, slide 1. So what happens? What is happening here? And we are going through this now with a trade from 2 months ago, so at the end of January. But let's probably go through what I went through here today. So just to give you an idea. So yesterday in the evening, for example, I met a good friend of mine. We had a drink together. We discussed a little and had talked a little about what's going on, how's the wife going, and how are the kids going, and everything's cool. And then we said goodbye. We waved goodbye. I went home. And when I arrived home, I was still not done for the trading day. So usually I have to say, okay, now I have to go to sleep. But before I switch on the light, I have to go now through potential after hours market movers, let's call them. And I knew already before that yesterday, for example, Micron and also Chewy, both were coming out with numbers. There's also Lululemon. I don't consider Lulu to be such an interesting trading stock, to be honest, because it's a low volume stock, and thus I somehow skip this, even though I've also in my Twitter feed here, you can find the earnings from there. And then I go through this and I see, okay, these are the numbers. I have a first BS then. I see the after hours reaction and I write it down. So in my case, for example, I tweet about it. And the thing is, some people might say, wow, this is a great service. So when is this guy going to sleep? Well, yes, I appreciate that some people might say, well, this is a great service, but it's first of all for myself, because that way I can just copy paste the data the next morning and include it in my slide, where in my Excel file, where I then start to prepare my game plan from. So it's most of the time it's for me, but it's also giving me a chance to hold myself accountable then to my followers and give them the information they can use for themselves too. Still, I prefer to do it myself. So take the resources and then write it down already beforehand in the evening before. And then the next day, I start the day. So first of all, I get up early. So usually I'm waking up every day at 7 a.m. or something, 7:15. And I have to get in my comfort zone. So this is usually something which is very individual. And I have still a clear routine, and I don't really like to be interrupted in this routine. And this is also something you really have to talk to with your wife or your husband, depending on wife or husband, whoever, and also your kids. This is something where professionalism starts already. In my case, it's that I don't want to work out, or I'm not going through meditation. Meditation is around an hour before I start the trading day then. But in my case, it is bringing my kids to the kindergarten. And how do I do that? Well, there's a certain routine. I really feel it's just a nice feeling. So just bring them to the kindergarten, high five. And it's like, so this is just a good feeling. And then when I return home, or it's not just returning home, but it's like I go home 20, 25 minutes. It's a walk from the kindergarten to the office then, so home office in this case. And I listen to an audiobook, for example. So this is my first step to learn for the day. It doesn't necessarily need to be on trading. It just needs to help you to start with a fresh mind into the day before you start to look at your charts and whatever. So first step in direction of growing as a human being, as a trader, as a human being, in this case, so learn something. And this is the start into the day, and I really need this. So if I don't have this routine and I'm interrupted here, I see that, and I have to say, okay, now I have to be a little careful. So I have to find something else. So like for today, in the morning, I was in Marcus' morning show. So obviously I didn't bring my kids to the kindergarten. It was an interruption of my daily routine. So what I went through then was I did a brain game, let's say, and I worked through an app I use here to also learn something, to make a step, because then I couldn't listen to the audiobook. And this is something to really keep me in sync with my environment, but also with the market in general. Once I return home, I come to the trading desk, and then what I say is I formulate a day for the trading day. So I want to, let's say, make sure that this or that will be, I have to focus. For example, yesterday, I really didn't like my preparation yesterday. I paid for it. So yesterday was a losing day for me. It frustrated me. And so what's the target for today? Get back to your way of performing well. So what do I need to do to perform well? It's a non-monetary goal. So at the end of the day, I don't know whether I will make money today or not, but I increase the chances of succeeding overall if I now prepare well again, as I did the day before when I went out of my comfort zone, for example, and increased my position size to a level which I haven't yet traded before ever. And it didn't work out. So it worked out. I made a small profit on the trade on Monday then, but still it was a step in the right direction. It was like I get out of my comfort zone, higher position size. I never traded that high before. And I felt comfortable with it. I was within my zone. It worked pretty well. And that's something which is non-monetary in this case. So it doesn't really need to increase your overall account size, but it will in the long run then. And this is what you write down in the morning when you get to the trading desk. So what are my targets for today? What do I want to achieve? And it's not I want to make money today, but it will be something like I will perform at my highest possible level and hopefully also increase my overall way of growing in as a trader in this context. So then we started already the day before with the next bullet points, preparation the evening before, which are probably interesting markets to watch, which are hot plays for today. So I do the following: I scan the markets here, then and I find potential A setup. So I know which setup worked for me and where I need to be really careful, or where I need to have a certain mindset. Like when I play an opening drive play, which I played in this case a week later in Facebook with the earnings. Earnings got the stock hot, and I played the opening drive then, but I was really sure that this is the play for the day. And also I was well prepared, completely in my zone, completely relaxed, but still very focused. If this, like today, is not given, well, then I really need to be careful of these plays, probably skip them and go to the plays which I perform best in, but where I don't need to be, let's say, fully focused, let's say, or fully in my zone. I hope to be in my zone because this is the part when I perform at my highest possible level. But with these A+ setups, it's like you focus on the low hanging fruit. So like you execute well, even if you probably haven't slept extraordinarily great the night before. Let's put it that way, probably. And then what I do, I focus here on the low hanging fruits, on my best setups, and then I formulate if-then statements. So if this happens, like for example in Hood today, if we flush 1550, then I want to see the stock rebidding and holding 1550, and if it does, then I'm long against risking the daily lows, and that's what I want to see. Reclaiming 1650, breaking above, probably adding then, and so on and so forth. And you really have to write this down, especially if you're discretionary trading then in this context, and then really take it from there. You also can make sure if you can scan all markets or don't have them on your desktop all at once, you can work with so-called action lines, probably we can call them. So this is like you set an alarm, you activate the line. You can also do this with the Supreme add-on, by the way, in the MT4, MT5, and then you get a signal in this moment, which like is a beep beep or something in your laptop, and you really realize, okay, something just happened, something became hot. So now I have to switch over and just see if the market fulfills my criteria to enter a trade. And so what next step? I fully concentrate on the market opening in this context. So I trade the market opening. So which means like I have the if-then statements, I have the game plan. This is the next step. I somehow went through this now in the second part here. So or like already in the morning with meditating. So in my case, for example, it's not just that I finish then with the game plan and wait for the market to open, but I also start to visualize. So what do I want to see? So like when I meditated now before I started here this webinar, I really went through, okay, so this is something I could imagine to happen. If the stock opens and we flush, then we come back to that level, we hold that level. So probably there's a feeder position risking against these lows. The market is pushing to new highs, breaking above the pre-market high 1650, something like that. I add something more and then try to increase the size if the market moves in my direction and does what I hope is to do in this case. And this is something you visualize, and then you clear your mind, and still you were already there. That's why you can then execute at your highest possible level, because there's nothing new or nothing you haven't yet thought about before, but you feel completely in the zone, in the moment, and in fact, and take it from there. So that's it on the first part here of the day, but we don't finish there. So usually you focus on the market opening or the first half of the trading day. In this case, it depends on when the market opens. So in my case now, it's obviously the US market opening. It could also be European market opening. But in my case, I fully focus now on US equities. So this is where I'm at home. And now there might be the ending of the opening phase then, and you traded it, and then the first journal taking takes place. So you write down, okay, which trades did I take? Write it down. And then you say, okay, what went good? What didn't went good? Where's something I need to focus on? What are potential plays? Probably something like what are potential plays now I could take in the afternoon then. Afternoon, in case of you started already in the morning. In my case now, it's more like the day comes already to an end. But let's assume we started the day in the morning and you went through this, you took your notes, you write down, okay, this is where I perform well. This is something where I need some better preparation or what to focus on in the upcoming hours. But still, there's something now which is very interesting, because if you finish that and you have taken your notes, then it's time, it's lunchtime. And there was an interesting anecdote I'd like to share with you. So when I started out as my as I started my career as a professional trader, it was really a professional trading career because I was working for a market maker who was making quotes. So it like a specialist at a stock exchange who was a liquidity provider there, working for the stock exchange. And so the interesting thing about this was obviously you weren't the only one, but there were also colleagues. And then there was lunchtime. And there was one guy who was just eating really dirty stuff. And what do I mean with dirty stuff? In this case, you can read heavy stuff, but it was really dirty. It was like French fries, pizza, a hamburger. Then there was some chocolate ice cream. So he was really like, he came in the morning. He was fully focused. He was one of the most disciplined in terms of trading guys I have ever met. And after lunch, he just completely lost it. It's just not, he wasn't trading worse, but he wasn't trading at all because he was completely done by the heavy stuff he just ate for lunch in this case. This is something you need to understand. Your diet here has a direct impact on your overall performance. That's not just true. And by the way, just 1 second now, I will continue. I have to continue 1 sec. I have to just here write down some data now. So 1.3 million. So in case of MU, for example, I'm writing now down how much volume was traded in the pre-market. And this is already something which I need to be aware of. So there were only, I mean, it's still 1.3 million shares being traded in the pre-market, but it's not more than 2 million, which I need for the stock to be really hot. This is different in terms of Chewy. So there we have 767. And then we take it there. And then there's also, where do I have Hood? So 7. This is interesting because so from an earnings play perspective, Chewy is better than Micron because it's, let's call it, hotter today. But trading wise, I favor the short side, but the problem with this stock is, and there the intraday fundamentals come into play, it has a very high so-called short float. So there's 30%, which is very high. So market participants like hedge funds are betting on the stock to continue to go lower. If you now have a deceleration in terms of growth, so Chewy is I'd say, classic growth stock. The problem with this is that if you short the stock, there's a risk of so-called short squeezes, which could result in some, let's call it, choppy moves on the upside. And this is something where I don't really like to be short in. I somehow have a game plan for today for the long side, for a short squeeze. In case of Robinhood, after yesterday's performance, in fact, it's not that necessary that we have the stock being so hot now pre-market, but here it's more like a technical play, and most of institutionals probably coming in after yesterday's announcement now when the stock opens at 3:30 German time in this case. But come back to the presentation today. So heavy stuff. That was the lunch. And so this is something you have to keep in mind. So find out what works for you. What works for you in terms of diet? What works for you in terms of how to stabilize your mental framework, meditation? What do you need in terms of overall conversation? Which people you have to talk to? Which videos you have to watch? Which music to listen to? All this comes together and shows perfectly why it's so important to really know yourself and know what works for you and how you perform at your highest possible level. The next step is then after lunch, obviously coming back to the trading desk, and then go for the second half of the trading day. Similar plan as before. Most likely you have already a game plan. You have already stocks you watch. You have already level you want the market to break out from after an opening drive. There might be a consolidation phase, something like that, a wedge forming or flag forming, and then you just trade it from a pure technical standpoint, whatever it might be. You should have a clear routine here, how to know about the plays then in this case, and how to trade, how to tackle them in the second half. But, and this is now the thing, after the market closed, trading is not finished. But before you close down the laptop, and however devastating the trading day might have been. And so yesterday it was, I mean, I lost some. It's not a big deal, but still it was frustrating because I wasn't fully focused. I wasn't well prepared, something which is uncommon for me. And I was really, really, really annoyed by myself. And I didn't want to watch my trades anymore. And it was like, wow, and now, but this is now the point where you can still learn something and grow from, and emotions are still fresh. So write them down. So this is when the market has closed, not just write down where you enter, where you exited, and what was the risk reward and so on and so forth, but also how you felt and why did things spiral out of control. Write down once you're still emotional, save it, and then rewatch it in the morning. So for example, I was really emotional yesterday. So in terms of what I wrote, I was like, if I do this once again, I will never trade live again. So it's just like, I will trade demo for the rest of my career if I repeat this. And in the morning was like, well, I wrote it, I smiled a little and I was like, yeah, well, it was okay. Well, I lost some, okay, fine, but it wasn't that ugly. I was like, okay, yes, could have been avoided, especially into the end of the month and giving back some of your gains you acquired so far. But well, it's not necessary that you question your overall ability as a trader. But it's very important to write it down after the market closed and not just shut down the computer, but really use these emotions as a source of information to grow from and to build your trading then from. And so this is exactly why I say preparation, and also then work after the market has closed, after you finish your trading day, why this is so important, and why the trading itself, the execution part, sure, it's important, and you have to make sure that you execute well during that time. But I'd say overall profitability and professionalism starts, in fact, before and after the trading day. And the probably not so important part is the trading part itself, where you just have to execute your plan you wrote down already before. So that's it around the overall routine I go through. And so now I want to go through a real trading example. And I want to go through here Apple in this case. So the interesting thing about this is just review the webinar from the, let me just see, it was the 29th, 28th. It was the 28th of January in this case. There was a webinar, and I ran this webinar. So I was in the webinar before. We finished the webinar, and then I fully focused on trading the stock here in this case. And you can also see the execution. I have it here for you. So it was shortly after we finished the webinar. So that means I could only jump straight right into the action because of all the preparation and work I did already before, so that I was capable of really seeing what happened. And it happened, or it started already the evening before, with me seeing, okay, Apple came out with earnings. We're crushing once again. EPS here in this case, $2.10, 190 expected, revenue 123.95. Expected were 119, so also once again over 10% better. Products revenue crushed it, Mac revenue crushed it, iPhone revenue crushed it, service revenue crushed it, variables, home accessories, and so on crushed it. And there was a gap. It wasn't excessively greater than 3%. It was just 3%. But this is something we have now to put in perspective. So what's obviously interesting is, first of all, I'd want to see a gap which is greater, 3% on the upside, respectively minus 3% on the downside after earnings, especially in such a heavy stock like Apple is. But also, I'd like to have a stock which has potential to move. In this case, an ATR here of greater $1. In case of Apple, it's no big deal. It's $4.44. And then what I'm also interested in is I want to see an average daily trading volume greater 1 million shares in general, that the stock becomes interesting. So it's not just that I say, well, the earnings were hot, the gap is given, and now I take the stock, if it's a low float stock or something like that, where a stock which is not trading minimum 1 million shares per day, I'm not really interested in that. And even in a case now like today with Chewy, I think average daily trading volume is something like 1.6 million. If I have a stock with 22 million, like Micron, and I have Chewy. I'm Chewy. I'm sorry. I'm Lululemon. I'm sorry, not Chewy. And I have Lulu then with 1.6. I definitely go for 22 million because it's more liquid. There's a better way to gauge my risk, and to say, well, am I capable of exiting the market if the market does not move in my direction or does not my hypothesis, my trade hypothesis here does not play out as I expected it to play out. So I usually take the more liquid stock in this case. So in this case, Apple, I mean, most valuable company in the world, market cap of something like 2.5, 2.8 trillion USD, 98 million shares being traded a day. And then also, usually you want to see more than 10% here. So that means close to 10 million shares being traded in the pre-market. That was interesting. That wasn't given. It was just 6.1 million, which is, for example, something where you then say, okay, I'm not playing the opening right away, but I wait for the market now to show me in which direction it plays and the overall market. And I've prepared here the MetaTrader. So this is the picture from the S&P 500, and what you can see here is this move lower, and we are focusing here on this period. So this is where the trade took place, and we saw a massive extension on the downside. And now, why do we look on the S&P 500? Why don't we look at Apple? Well, because the overall market was, let's say, was in play here already the whole month of January. And the interesting thing now is that here you have now the correlation matrix where you can say, okay, I look at the S&P 500 and then I look for the last 200 trading days, a daily chart, for example. And what you can see is that there is AAPL. So this is a ticker symbol of plus 83. It's a strong positive correlation here. Positions in the same direction on these symbols are very likely to have a similar profit. Positions in opposite direction will cancel each other out. What's very interesting for us is here the strong positive correlation aspect. So that means that Apple is a classic market play. If I now formulate into the month or into the end of the month of January, after this massive run lower here, if I see the market having potential to bounce, I also expect Apple to bounce. And I already have a bullish thesis here on the stock after these crushing earnings. So long thing short, if Apple will see bullish momentum, it's likely that the market will bounce and vice versa. So this is already underlying my overall trade hypothesis. And based on that, I then go through some technical levels in this case. And we don't go into too much detail on how to find these support and resistance lines. So this is not what this webinar is about. It's about how to follow a clear routine and which steps to go through. I think everyone has its own style in finding support and resistance lines. So there's no holy grail, but it's more kind of, let's say, an art. And in my case, I still have this routine I go through every day to find technical levels which are of interest. In this case, 164 as S1, so the first support level, 162, second support level, and 61 then. And R2, R1, R2, R3, so the resistance lines on the upside is 166, 168, and 170. So, and my game plan, this is the if-then statement then, reads, if I get to see a flush into the open, but we hold 162, so this is the S2 level here, and we rebid, hold here, so flush, rebid, and hold then I want to be long with the first target around 166, and the stop, I also make sure what to max risk max on the position is based on the ATR, 20%. So if the ATR, as you've seen here before, is $4, $4.44. Well, your risk is somewhere between maximum 80 cents to 90 cents in this case. So this is the max loss I'm willing to take. And based on that, I'm also calculating my position size. And that's in fact it. And so in the next slide, you can already see here what happened that day. So here's the execution from my trading journal in this case, so where you can see, so this is where I entered the green dot, and there was the exit, the first one, and there was the second one. So, and as I already said, it's not that exciting now where people going crazy about this. Like, well, I just executed. So I finished the webinar back that day, 38th of January. 28th, I'm sorry, 28th of January. Well, I look into my chart. I see, well, 164, 162. These are the levels to watch. You can see here, and when carefully watching, we saw a flush. We came in somewhere around 166. So this is the first candle. We see the flush. On the downside, we trade as low as 163. So we are not reaching 164. I'm sorry, 162. So S2, but the market turns around. And then what you get to see here is you get to see this short consolidation here. So this is the interesting thing. So here's the gap higher. And then you can see the market is holding 63 and is then holding here around, in this case, 164. That was the level I wanted to see to hold. I mean, in case of 62, yes, we didn't get to see holding it there, but more strength in this case. We held higher already right from the start, 164. That's usually a good sign. Short consolidation here, also above VWAP. In this case, a volume weighted average price, and this is where I took the trade then, with a tight stop below, in this case, 64. That was interesting. The volume weighted average price was around 164 that time, so it played already an important role. The market told me that it's important because it is the average price market participants were willing to pay for the stock, given the pre-market action and also the action in the first 30 minutes of trading here. So this is now when I know, okay, if we can hold this level, well, then I'm out here. So this is a level to risk against. So I'm long against 64.32. I'm risking here in this case a little more than 30 cents, which is also in line with my play. So the max risk I was willing to take here was 20% of the ATR, so 80 to 90 cents. So I'm risking slightly more or slightly less than 40 cents. Obviously, this is in my game plan. And then I have my take profit levels on the upside. So given the R1, R2, it's 166, it's 168. And this is exactly what I did then here, with an average exiting the position at 166.94, giving me an R multiple of 7 to 1. So for each euro I risk, I made 7, or in this case USD in this case. And in fact, that's the trade. So nothing special, in fact. So it's just like, okay, you can see here, this is the execution. This is what I did. But what's more important is like, okay, now what did I learn out of the trade? So obviously the preparation paid handsomely in this case. So everything you can see here is directly resulting out of the fact that I had relevant technical levels already beforehand. We had a game plan. And again, check the YouTube channel for the recording from the 28th of January, 2022. So you can see there, I was here in the webinar around the market opening. So I wasn't trading. And then I just opened the trading platform after we finished the webinar and was able to execute on the plan I already prepared before. And that's why I'm probably not that interested in the execution itself, because it was just like executing on the game plan I formulated before. So preparation worked well. And now, but still, what did I do well? So what can I take here from this trade for the next trade? What should I repeat and do once again, because obviously it worked? And where do I need something to work better on? Like, okay, where can you improve on? Because now you might say, well, obviously it worked. You made money on the trade. There's nothing more than making money on the trade. There is, or there should at least be. And this is exactly the next slide. But first of all, what did I do well? So obviously, I had a good game plan. I was very detailed in my preparation. I had clear levels to trade against, to risk off from, and so on and so forth. I knew this already in the morning. In fact, already in the evening before, I saw the earnings. And this is usually something I go through then already in the weekend before. So each Saturday, for example, I check which are the earnings releases next week. So I know which dates could be of interest. So I knew, for example, already last Saturday that here on Tuesday, I have to check the earnings releases after I come home from the meeting I already had on my agenda then again last week. And so here, the evening before, I knew already what is potentially of interest for me. So then I had a clearly formulated setup in this case. So a clear level to which level do I want to see to be conquered, to be held, to risk against. And I write this here. So it's a distraction. So being in a webinar right now is like a distraction from your focus in your trading. So, and if you're distracted and you know this, take steps to reduce the distraction you have here. And what steps are then in this case being made? Well, like for example, formulate a game plan beforehand, and then you jump into the water, but you already know the temperature of the water. It's not just that you jump into the water and then find out, oh, it's cold. Like but you have a clear plan in this case, what to look for, what you want to see, and then take it from there, because you visualize then again during the meditation before that. And that helped them to implement all these thoughts in a very relaxed way. And it's non-monetary goal. So I mean, just imagine the trade would have been a losing trade. Not sure if I would have had that much fun to prepare here this presentation, but in this case, like, I didn't know whether the trade will work out or not. It obviously did, paid handsomely, but still the non-monetary goal was like, prepare well, visualize the trade, and execute after the webinar. If this and that happens, then do this and that. And this is exactly what worked really, really well. But still, what can I do better next time? So where can I grow? What can I learn? And as I write here, so it's not much in this trade. So from a technical standpoint, it's really like, it's a no-brainer. Like it worked really well. But with a view to the next development stages, here you can see that. And that's why I already said it at the beginning, given what happened on Monday, adding to a running position for you. If you're in the driver's seat and see the market moving for you, position is working out for you, take risk. You have to add them, because you are on the driver's seat. It's like you are now the casino, and you have the edge on your side. So extract as much money out of the trade as you possibly can. And when watching the trade and reviewing it after that, usually I also record my screen. When I trade, I record the screen and then I review it. It's like I saw that, for example, there were clear levels you can see which were held in this case. So for example, Apple had a tendency that day, but in general, to hold round numbers. And if you see that 144, or in this case then, 144 holds, and the market moves in your direction, and you see a push above 145, holding 145, and there's the next chance to add against that level, take risk to your position, and do exactly that. And this is something which should be considered, which I wrote down as a next target I wanted to achieve in my overall process as a trader when trading equities. So, and this is something which is now working out quite nicely. And also, and this is something I haven't yet made the target, it's like a trade management via exponential moving average 9. So it like, I think it's a little too aggressive. Probably would have been better if I worked with an EMA like 21. I also use the EMA 9, but in case of taking so-called momentum lots. And so the thing is that the market moved, as you can see here, it sounds very technical. It's trade management via EMA 9 on M1, 75% ATR move plus EV. So that sounds like, okay, this is some academic stuff. It means that if I trade on a minute chart here, and if I see the market now moving in my direction, and I know that the average true range of this stock is $4.44, if now I see the market moving here in this context, something like $3.80, $4 in my direction, and is it then the right step to go aggressively after the trades here with your stop? Is this a way to manage the trade? Is it having a so-called positive expectancy? So do you have a positive expected value? Is this a profitable move if you manage to trade like this? And as you can see here, so obviously that looks very, very promising if you see here how the market behaved there. And it's difficult to see the market, or me being still in the position here into the close, into the evening. But sometimes it could be that the market sees a short consolidation and not rolling over that way, but continuing to push higher, especially if it's thus extended on the downside. And then you really should be careful here in being too aggressive with your stop. And this could be longer term, could be a minus EV decision, and thus something to consider. But this is something to keep an eye on, to run a backtest on, but a chance to grow even from a very profitable trade in this case. So very quick summary to today's webinar. The day of a professional trader follows 4 simple steps. In fact, it's like we plan the trade, we trade the plan, and then we review it, we tweak, and we repeat. And this is in fact it, every day, over and over and over and over and over again. But you have to know what to plan for. So what do you need to see, how to execute then accordingly. And then also, even if you have a highly profitable day and made lots of money that day, hopefully, and this is usually a great feeling, but it's always still a chance to learn something. It's not just the losing trades you should learn something from, but I think real professionalism comes from when you say, well, I made money today, but I'm not comfortable in how I executed here. And this is something I will do about this. And this is something I will do about this here, and so on and so forth. It's easier, let's say, easier when you have a losing trade, but sometimes you just traded perfectly well and just woke up on the wrong side of variance in this case. Just happens. I mean, this bad luck happens in trading every day, more often than we want to, but it's just part of the game. But also here, like, are there signs you could probably not foresee it, but how to probably exit closer to break even, or reducing the overall losing size, for example, losing the overall loss in the trade. So this is something which is part then of the review part, the tweak part, and then you repeat once again. And if you continue doing this, as in fact, no trade will ever be a losing trade again, because you will have the opportunity to learn. Some will make you money and you learn from, and some will lose you money, but you still learn something from that and can grow as a trader, in fact, in the long run. That's it for today's presentation. I hope you enjoyed it as much as I enjoyed preparing it. All infos about upcoming webinars can be found on admiralmarkets.com. So here are also the contact details. If you have any questions, any feedback, any wishes for further future webinars, feel free to shoot them over. And here's the risk disclaimer. Read it carefully, very important, and be aware of the risks which are involved with trading. I hope you enjoyed the webinar. I hope you got something out of it for your trading, and see you next time. See you next week on Friday. All the best. Happy trading. Bye-bye.